Hey folks, welcome back. You know the feeling when you wake up and you check your portfolio and it's actually green. Not just green, but smiling at you. That was me this morning. It's been a good week in the markets, but not without some curveballs. I'll walk you through everything from earnings to economic data to trade whispers from the White House, out of DC, in China. If you are new here, I'll keep this simple and real. And if you have been following for a while, you know the drill. We are not here for a hype. We are here to understand what's really going on in the market. I usually like to first start off by just sharing that this is a video that is meant for educational purposes. It's not for financial advice. So I'm simply sharing what I'm doing in my portfolios with my own money based on my risk preference as well as the goals and the experience that I am facing as I go. So always do your own research or talk to a qualified advisor. Now, let me start off by sharing with you the market insights. And I will talk about the stock market, the bond market, and the current market because those markets they are very, very important. And in particular, I focus on the US and Canadian markets, but I'm going to be a little bit more detailed on the Canadian market. Now, let's start with the S&P 500. The S&P 500, which is a broad indicator essentially tracking 500 publicly listed companies in the US that come from different sectors. Over the past 5 days, at the time of recording, the S&P 500 was 2.53% up. So, which was something that is very good because the S&P 500 has been having a streak of winning days after dropping for almost even going towards the bear market over the past couple of days. I think it went down extremely violently on April 7th, even touching the bear territory. That is a drop of at least 20% from the previous high. So that was a very pretty strong bounce given what I just explained. But what has been fueling this around? There are two things to have in mind. Number one, this week there are big earnings, which I will get to in details in a second. And number two, there are some trade talks which has brought in some optimism. So the White House hinted of potential discussions with China, which as we stand, there are 145% tariffs by the US, and China retaliated as well, but not as much as 145% tariffs. And these are big trading partners in the world. So whatever they do or say is likely to move the market. So China indicated that they are reassessing the possibility of having some talks with the White House. Hopefully, maybe they will ease those tariffs and reduce those tariff rates and thereby kind of like increase, the trade between them. It matters, and I will discuss a little bit more about that. Even though that may sound like it's not much, but for markets, just a sign of less tension between those two superpowers can shift the sentiment as we can see in the market, especially also on the geopolitical climate. Now, let me dive into the earnings, and I'm going to talk about the earnings on Apple, Amazon, Meta, and Microsoft. So, let's talk big tech. Like I said, earnings are the center stage this week, and I'm recording this on Friday, and this video you are seeing it on May 3rd. So the quick rundown is that Apple, their revenue came out at 95.4 billion versus 94.66 billion that was estimated by the Wall Street analysts. So mainly the revenue came from hardware. Services did okay. The stock actually pulled down a little bit. When I woke up today, it was around $204, and I actually added, a few shares in one of our portfolios. to open a position on that as well. And this is something for me, Apple, they are a fantastic business. And as long as the best case scenario, these tariffs, the US and Canada, they resolve this. But Apple, Tim Cook indicated that uh, 900 million is actually going to be the estimate for the cost of these tariffs in terms of doing businesses, but they are going to be investing in the US. And I will put a link in terms of the highlights. But the bottom line, when I'm investing in a stock, I'm looking at their balance sheet, their who is leading them, and I've said this. So for me, Apple long term, I'm still bullish, and I believe 205 is still a good buy. But again, I usually lock in some profits, and I have some positions that I have for long term, but I'm comfortable holding Apple for the long term. But that doesn't mean that I may not sell should I see the changing market dynamics. And moving on to Amazon, Amazon revenue came up at 155 billion 0.67 versus 155.04 billion estimated by the street, by Wall Street analysts. So they did beat the earnings, but the stock dropped. And I saw when I was watching the earnings report, just as it was released, Amazon went from I think $190 a share to almost 182. But now it went up again. I added a few shares on Amazon, and I actually have a big position on Amazon relative to other stocks in my portfolio because I'm bullish. Last time I checked, they had 100 billion in uh, cash on their balance sheet, cash and cash equivalents, and of course things can change. But I still believe that Amazon is a very wonderful business. And right now, I think it's at a discount. Microsoft actually crashed it. Their revenue, it came at 70.07 billion versus 68.42 billion that was estimated by analysts. Microsoft is a great business. I cashed out, I made some profit on Microsoft and Meta. I took some profit, but if there is another volatility, I'm going to actually get into Microsoft. But I had a very good average. Again, they issued a cautious guidance as much as Meta did, but for Meta, their revenue came at 42.31 billion versus 41.40 billion that was estimated by analysts, which was a very good thing. But these companies, they have very strong fundamentals in my view. So earnings, in this case, they are reminding us that the strongest companies can stumble, but that's where long-term opportunities come up. That's a great takeaway there. Now, in terms of updates in Canada, we now have a new prime minister, and I'm going to share a little bit about some trade talks. Prime Minister Kani, I'm glad that our elections went well and we had the candidate who won. Since Prime Minister has been elected, in response, President Trump has actually said he's open to talking to Canada and taking Canada seriously in terms of the trade disputes. But Prime Minister Khan fired back and he indicated that Canada's sovereignty is non-negotiable, which I very much agree on as a Canadian. That's a very strong stance, and the markets are watching that and what's going to develop, and especially the Canadian exporters and energy stocks. The key thing here is we have the trade deal between Mexico, US, and Canada, and if they are going to renegotiate this and make it easy to do business between the two countries. But what is undeniable is that Canada is now looking for other reliable partners in Europe, elsewhere. And that's something important for Canada to diversify the economy so that we do not rely 75% of our export on one destination, that is the US. And another important milestone that Prime Minister Khan is working on is to actually reduce the intra, uh, Canada wide barriers. In other words, by Canada Day on July 1, the goal is to actually, remove those trade barriers so that Canada is actually a big country in terms of geographically, but we have 10 provinces and territories. So if we can trade on our own, we can actually make it, you know, big in a way before we even talk about other trading partners. Because think of it, if we can trade with Ontario, which is our biggest province in terms of population, and we can also trade even more with Alberta, that's even great, and even other territories, Labrador, Newfoundland, and all these other provinces. So trade is very, very important because historically there were higher trade barriers between our provinces and territories. So that's a very strategic point in my view, and I very much support the Prime Minister in that. Now I'm gonna move on to the economic data, which in my view is still signaling uh, mixed there are some mixed feelings in that regard. So GDP came down at 0.3% below what was expected at 0.2%, and that's a red flag. Again, we could be in a recession, but it doesn't mean that we will be in a recession, right? We could be, it's only going to be confirmed if the next quarter or other indicators that the National Bureau of Economic Research cause it a research or a significant contraction, then they will call it. But ideally, actually what happens is when there is a recession, companies that have poor balance sheet, they may actually struggle. That's why I am only investing in fundamentally strong companies, because those are likely to weather that storm. For me, it's an opportunity to get in long term. Unemployment came at 4.2%, but jobless claims rose to 241,000 this week. Non-farm payroll, it came as a bit 177,000, but again not super strong. Core PC inflation was flat at 0.0% month on month, which shows that inflation might be cooling, but not enough for the Fed. This is the Fed's preferred indicator, and I'm going to talk about the Fed meeting and the potential implication for the meeting between 5 and 7 next week, that's 5 to 7 May. Uh, so what does this mean? In my view, the economist in me, it means we are still in a weird zone, and the market is looking strong, but the underlying economy is showing some flashing warning lights. Again, what I've seen and what I think is that even if the economic situation in the US or even in Canada worsens, the physical and monetary authorities will step in as appropriate. In other words, in the US, the Federal Open Market that is chaired by Chair Powell, either they are going to cut interest rates, most likely not in this coming Fed meeting, but maybe in June, to actually cool down and adjust to that, what is happening in the economy, because they have to step in, right? So that's the importance of actually having these institutions to step in. So that's why I am, for the long term, bullish, because I believe that these authorities, they would not let the stock market or the economy to crash without acting. They will try. It's not uh, that easy, because sometimes they react in a lagged fashion, because sometimes they have to look into the data, do some analysis, and then make a conclusion to then should we act now. Sometimes it's a little bit too early or too late. So that's the trick part about handling the economy. Now the 10-year treasury is a very interesting indicator in my view. So let's talk about the bond market check. Yields ticked up to 4.301%. I'm going to put a chart here so that you see. But 10-year treasury yields, they're a very good indicator, like I've indicated here. Basically, investors who actually bet on the US economy as a safe haven, they can actually buy the US 10-year treasury bills, and they are actually set by the market. Now, the Fed actually then set the overnight rates by influencing money supply and playing with interest rates. So that's how it works. So this is important. The bond market isn't buying into the soft lending narrative. That's what it means. There's a lot of volatility, higher yields, it means higher borrowing costs, and that eventually slows down economic activity. So if you're a trader or investor, this is something you want to keep an eye on. Bond markets tend to sniff things out before equities do. And usually, seasoned investors, they actually play in the bond markets and the currency markets, and of course, stock market as well. Now, going on to the currency and the global impact. The dollar held up decently this week, the US dollar, I mean, but the bigger story is the global sentiment. The US soft data plus global trade hopes, like I indicated with China, pushed the risk appetite higher still. If China really engages with the US on trade, we could see capital starting to flow back into risk assets like emerging markets and US equities. But again, there are caveats here. Things can change. What I've learned with the Trump administration is that, their policies, one of the secretaries or officials from White House, they can just say something today and then another one tomorrow. So there has been a lot of volatility. So I'm playing it safe. So what did I do? Let me share some strategy notes. But again, this is what I'm comfortable with. This is not investment advice. Now, let me start with just saying that I had a very strong trading week. My portfolio is smiling, and I added some positions on Amazon and Apple, like I indicated, and I continued with my cash secured puts and covered call strategy. And this has been one of my favorite strategies. And I walk you exactly on those trades on the video that's going to come out on Sunday. So if you are curious what I'm doing in terms of my trading strategies, make sure you watch that video that's going to be out tomorrow. And again, if you haven't subscribed, make sure you subscribe, you like, and you share this video. Now, looking ahead, there will be the Fed meeting on May 5th to the 7th. So in my trading, I am light because this Fed meeting most likely is gonna cause a little bit, increased volatility. So I'm kind of like I don't like to play when there are those big moves, because if you are wrong and you don't have a stop loss, you're gonna kill your portfolio. But volatility is good. Then the key thing is that the tone and the guidance from the Fed chair and how he will talk about the rates, and also if he signals that the rates will stay higher longer, we could see increased volatility or even the stock market to drop. I'm preparing for both scenarios. That's what I do as a trader and investor. I don't just focus on one scenario. Let's say if the market drops, I have cash. If the market goes up, I have some equity position. And even if the market drops, sometimes I will have some positions that actually print money if the market drops. Like I can take a call on the VIX, right, which is measures the volatility, let's say for the next 30 days in terms of the fear in the market, and I can do puts or vertical put spreads. In other words, if the market drops, and I will have a limited profit reward ratio in that regard. Now, in terms of um, how this week unfolded, I think the greatest lesson is that a lot of things have happened, but if you don't understand what you're investing in, it's easy to get lost. So I don't want to be on the wrong side. So I maintain an eye on what's going on in the market, but also I keep on educating myself. And right now I actually have the Bloomberg TV and I'm recording this video. But at the end of the day, I keep an eye on things that matter, like I indicated. So take it slow, don't chase. These are some of the lessons that I have learned. I like to focus on quality, and remember, long-term success in the markets is about discipline, patience, and strategy. My long-term positions right now, they are printing. If the equities market is going up, I have a bit of cash right now because, like I said, I sold my Microsoft and Meta. I took some cash. I also needed some money, so I saw some nice profit, and then I had to liquidate a bit of that. But I still have quite a bit of money in the equities position for the long term. So if this breakdown helped you, feel free to pass it along to your friends. I post weekly updates, and if you like something like this, and if you are already trading and investing seriously, feel free to book a one-on-one coaching session with me, at www.streetwiseeconomics.com. That's it for me this week. And until next time, trade and invest wisely and may the markets be on your side. Thank you. Thank you so much.